Welcome back. As promised, let's talk markets, stocks, sectors. George Thomas from Quantum AMC is now with us on the show. George, the sector which has got a shot of life has been Vodafone Idea after the successful closure of its 18,000 crore FPO. Do you see a new lease of life for the entire sector? Stocks have already run up, but can this sector be a leadership sector in the next 2 to 3 years, in your opinion?
Yeah, definitely. The sector has become an oligopolistic structure with very limited number of players. And if we look at the kind of ARPU growth which has happened in the last 4 or 5 years, it has been fairly minimal. And if you compare our tariff with what is existing in other part of the globe, it's fairly competitive and very on a relative basis, it's pretty cheap. So there is substantial scope for ARPU to increase from here on. And therefore, the players in the space could make reasonably good profits in the next 2-3 years.
Okay, Thomas, hi. So let's just sort of talk more about that. There's a lot that's happening in telecom right now. There is a chance that we might have the third player revive. We've seen pretty steady performance from Jio in the numbers that were just released yesterday. So, how do you find current valuations? And there are tower companies as well, because if we have a more thriving market, then perhaps they stand to benefit. So how do you find overall telecom valuations, and what part of the telecom chain would you be comfortable investing in?
So we have one of the telecom player in our portfolio. And the broad logic there is, as I said, last few years, the use of data has increased multifold, and it has become more of an essential component. So our sense is, players would be able to take reasonably good ARPU hikes from here on. And if we were to assume that even the third player, when the promoters and even the other stakeholders have kind of subscribed on an assumption that we would be able to take reasonably good ARPU hikes so that even the third player can kind of sustain. So even the existing players, I don't think they would refrain from taking reasonably good tariff hikes in the next few years. So if in that context, the valuation does not appear very expensive. But of course, if we look at from a trailing earnings perspective, we may not see much room for valuation to catch up from here on. But our sense is earnings growth should be fairly strong.
Earnings growth. Okay, so that's about the telecom sector, particularly on this M&M Financial and this fraud, which has taken the stock lower. Now, 150 crore broadly is not very large for a company of M&M Financial's P&L. But should one be questioning the governance, the way the risk management lays out in M&M? Is there a broader ramification? And do you like M&M Financial in the NBFC pocket in particular?
So I may not be able to comment on stocks specifically, but when we evaluate the overall NBFC space, we tend to stick to players with either niche skills or players who have an advantage on the cost of deposit front. So we have a couple of names in our portfolio, but generally when we evaluate this space, we are cognizant that there could be most companies, they operate at fairly high yields compared to the normal ranges which we'll see in the lending space. And that is kind of reflective of the borrower profile. So we factor slightly higher than probably what the street estimates on the credit cost front. And we kind of take some bit of margin of safety on the multiples. So generally, barring select names with niche differentialities, our multiples tends to be fairly conservative compared to street.
George, what have you made of some of the early numbers that have started coming in so far? I mean, I'm now talking overall, general. Till now, we were in a bit of an earnings upgrade cycle, and that was really fueling market sentiment and momentum. What are you expecting from the fourth quarter? And generally, I mean, are you okay to hold some cash, or are you fully deployed? What is the overall approach you're taking to the portfolio?
Right. So in the last 6 months, we have had more trims than what we added, purely because of valuation reason. So our sense is broadly from an economic perspective, the economy is reasonably strong. So the underlying fundamentals remain reasonably fine. But the only constraint remains from a valuation perspective. And last few quarters, what we have been seeing was some bit of raw material moderation, and that was giving a fill up to the margins. Despite, let's say, the volume growth or the revenue growth being muted for many sectors, we saw them getting benefit from those benign raw material environment. But going into the next year, if the Middle East crisis and the commodity spikes were to continue, it could be a possibility that we might those margin tailwinds which we saw in the last few quarters that might reverse at least for some time, and that could kind of constrain the earnings growth in the medium term. But having said that, that's not the base case assumption, and our sense is probably if the anyways geopolitics is always difficult to comment. But it may not, if it does not go to an unmanageable situation, then the underlying fundamentals look fairly strong for a reversal probably a few quarters down the line.
What have you made of HDFC Bank's numbers, and what does it, portend for the entire private banking sector? Do you think the other banks too may have to focus more on profitability, the return ratios at the expense of growth, and this entire sector could be a little slow growing?
See, we are quite positive on private sector banks as a space, and it remains one of the probably the only sector or one among the couple of sectors where there is reasonable valuation comfort. So our sense is, so the largest private sector bank, of course, he has certain issues due to the specific issues with respect to his merger and stuff. But overall, as a space, our sense is, next couple of years with a favorable credit environment, things should be reasonably fine. And at some point in the next couple of years, we could see some bit of demand coming up even from the corporate credit space. And then that should ensure that their margins and the growth comes back. But of course, the liability franchise would be a key differentiator, and that has to be evaluated from a case-to-case perspective. But from an overall sector perspective, we are fairly comfortable at these valuations, and our sense is, this is probably the time to add more to the space.
Okay, all right, George, we'll leave it on that note for today. Thank you very much for joining in. Good to get that perspective from you. The market's holding up. I mean, the Nifty has not moved much from the last time we checked. It's still about a 50-point gain. So in that sense, it's quite okay. The advanced decline ratio and the broader market, that continues to be the story. Let's pull up the advanced decline lines. You've got over 1,500 stocks advancing, just about 700 stocks declining. So it's a very healthy looking screen, and it's holding at that level. Let's take that break. And as we take that break, here's the announcement. We're launching CNBC-TV18's first ever live personal finance webinar, CNBC-TV18 Accelerate. Personal Finance Handbook with Sonia, where she'll be joined by 3 well-known experts on Saturday, that is the 11th of May. We will be diving into everything you need to know to master your finances and to learn to grow your wealth, be it insurance, tax savings, managing your portfolio, retirement planning. There's lots to learn. Absolutely. There is lots to learn, lots to do, whether in your 20s, 30s, or even 40s. This live webinar is for you. And remember, we have limited seats, so don't miss your chance. Register now. Scan the QR code to register or log on to CNBC-TV18.com. And we will see you on 11th of May, 9 a.m.